All right, welcome back for another week. We are kind of killing it this week, and last week the setups were premium going into this week, and we've had quite a few that followed through very nicely with what setups we were noticing. We'll review a few of those as we go. We got some new stuff to talk about this week, and there's some swings that are happening in the AI space that are kind of taking shape and doing the opposite of what the Chicken Little types were saying. The sky is always falling for those guys, isn't it? It's nuts.
Yes, it is. A week and a half ago, we had a black swan event. Jeremy Siegel came out and said the Fed's got to do an emergency rate cut. And I don't think CNBC did a markets in turmoil special, but they did. I know Kramer was preempted one night for some CNBC special about the market. So yeah, we were all supposed to die last Monday, and I don't know. I'm still here.
Yeah, I'm loving this rally that they've generated by, well, they pushed the fear index up a bit, and then all of a sudden, I was so badly wanting to trade a bearish entry on that. I just didn't get my risk appetite just right on it, so it didn't fill. I don't have to care because I got plenty of bulls.
I had my UVixie puts.
Nice.
I wish I still had them. I took my profits, but
I had a carryover. I'll get into it. Let me get the QQQ chart up because this was awesome. I gotta go over this one. Let's go for a full size. There we go. All right, so getting to the 2 hour. This move here that we picked up the other day was freaking awesome. I mean, it was a bona fide measured move. It didn't quite hit the full box, but I mean, it went right up to a key pivot area where we've been watching price right at about 461 and some change. And through the weekend there, I carried a debit spread that I go way out of the money on these debit spreads. Paid 2 cents a piece for Monday expiration debit spreads on Friday afternoon, late in the day when volatility was just flat. It was just a crummy market, right? And then took on closed half the position at 1,000% return on that risk, and then closed another quarter of the position at 2,000% return on risk, and then kind of let the rest of them fly for a little while. Close the rest of them at 1,600% return. It's just phenomenal when you can pick up a consolidation break like that. And I was totally expecting Monday to rip a face off according to technicals. And we were right under a reversion target from the previous trend anyway. So it was like, well, if we run the extension, that's the target. And it played out beautifully. I could not have asked for a better trade. And then did another one overnight. This one only netted me about 250%, which this is kind of small for my.
But that sucks.
It's but I'm taking such outside moves on this stuff in the options chain. I swear, like no one's gonna touch those. I see volume on them; they move, and I can see a spread. You get 2 cents risk on a $2 wide spread and just knock it out of the park. You hit one home run, you could have a streak of 50 losers in that thing and wipe them all out and double the risk back in return on one winner. That's what I do with price action like this. When you got big moves setting up, why not take a home run swing? Every once in a while you get it, and you get that ball and just tear it out of the park. It's pretty fun. Going into some more frugal trades like that, that's kind of my MO. I'm known for that, and I love taking all the big percentage wins. I mean, I'm not putting massive size into these things like 400 or 500 spreads. The one I did over the weekend. I carried 40. I should have usually run with my 100 contract entry, but I didn't. I ran with 40. I wasn't feeling all that great on Friday. I was just having a head cold day, and it just wasn't the best time to be trading. So I was like, okay, I'll take a somewhat YOLO. Ran 40 of them, killed it. Typically, I trade those in 1 or 200, but that's just kind of my MO. It's not a lotto play, but it returns like one. Pretty fun stuff.
Yes, it is.
Another thing I love to do is I love to play on stuff like Tesla, where I've got big volatility moves. Same scenario. I'm way out of the money with these things, and the only difference is I can do overnight stuff on SPY and QQQ. very effectively. And then stuff like Tesla, I'm running months out. So I'm like, when last month I was running like September 20th expiration, just to kind of give you a ballpark of how long I play those. But same scenario, just longer time frame. They work out nice. I love them. Anyway, I'm trying to shoot for a Guinness World Book of Records. I don't know what the heck it is. What's the highest percentage return on an options trade ever? And I don't see any records of it. I haven't been able to find anything on that. I wonder if anybody out there can find that number for me. That'd be great. I would love to be the guy who puts that Guinness Book, record swing trade on.
I mean, if you go out on FinTwit, I'm sure you'll hear a whole bunch of guys who are throwing out some numbers.
I might
Probably not real, but
I might check into that. I had a situation where the rest of one of my Tesla swings, I mean, mind you, I think I paid 4 cents a spread on a $5 wide for those, and I was knocking like 2,400% on those pretty easy. I had one where I think it was just an oddball swing I traded. It was I want to say it was a $10 wide, and I ran like a 5 cent risk on that one, and it was like 22,000%. It's psycho. And I only did like 4 contracts. I was like kicking myself. I'm like, man, if I would have taken some size into that. But leaving money on the table, you can't dwell on it. That's how FOMO happens. So don't go there. But anyway, today I think we're looking to follow through. I think Q is probably going to push to B in our liquidity zone, which is right up to that previous high. And I usually mark these wicks with a liquidity box, and that's where we're likely going if we finish this push through this measured move. I took a read on that 30-minute candle this morning, and it basically just sized this guy for a measured move into the opening today, and that worked out great. Just a nice, easy swing from the open. Our members and myself included, we took some major profits on that. And we're done for the day. We could be finished for the week with that move. That was an easy one. Going into later times here, you go out to a daily chart. I drew this this broadening pattern that descended, and I tend to draw a bunch of fans on it so I can find all the intermediary price targets within it. And then when they break out, they typically break bullish. They'll typically do a reversion trade. Sometimes they'll go back up to the previous high just before the breakover, and you can see there's a big gap to fill there. So if we break out above that, we got a pretty good shot of following through with QQQ anyways, up to like 483, 44 would be a good range. And we can poo-poo all over those Chicken Little types all we want. So they keep saying the sky's falling. We're like, well, yeah, trade the chart, dude. Shut up. It's really easy. Technical analysis wins. Your attitude, your emotions, they don't trade well. And hopes and dreams don't pay the bills. So we all know. Looking into our list of stuff to look at. Let's see. I'll start with yours this time. You had some pretty good ones picked out.
Yeah, and actually I got a new one we didn't talk about, but I just noticed it. It's Micron. So MU.
MU. I haven't traded that in forever.
That's something I've got in my long-term portfolio, and I wasn't paying any attention to it because of how bad it sucked.
Yeah.
But, I mean, I'm loving this chart right now. I mean, you just popped above the 200-day today, and it's in the right space. So this is one I really like here.
I like it. I haven't traded that since Kramer talked about it back here in like I don't know, September of 23 or November of 23. We had that nice 2-for-1 measured move set up, and then it pulled back, did all its stuff. Then it blew everything out of the water and ran on up. I haven't traded it in a while, but I did have an old analyst target on it up here at about 120. And currently, that's just the high side of a reversion trade for this whole trend.
I had the 50-day is 121.68.
Sweet, that's about right in the range. I think we're in for a reversion swing, although I'll also say we should hit some resistance right around 110 or so. But if things keep going well for Micron, then yeah, we could blast through that. That's not a problem. Nice chart.
I mean, the whole market should hit some resistance at some point, just because we're day 6 of it going up. And Micron probably would, but I'd be using any any dips, any resistance on anything is a buying opportunity here.
Oh, for sure. I can see a quick 4-hour liquidity zone right on top of that bar there, so that gives you a good target range. I like to mark those in orange. Yeah, we could see this thing swing up, and of course, you look left, you find all the big candles in the previous trend. Typically, you'll find half or whole rule applies to those. Like you can see the bars here pretty well. The split is about a third of that bar. It's broken half that bar. Next target here is like 107.20 for the day. Maybe we'll swing high and finish this bar too, right to the liquidity zone. I like this one.
Yep.
Good spot.
Microsoft is another one. I mean, it's a similar pattern in that it just got crushed, broke below the 200-day. I think I talked about this one last week. I mean, it's a little bit extended above the 200-day, which is why I like the Micron chart better. But, market keeps going up. No reason this can't go right back up to 465.
Oh yeah, it's got that look. And current target, we blasted through a liquidity zone. That was easy. We're looking for an extension for a reversion trade, probably around 425, 426 for the time being, and then beyond that is after accumulation, of course. Good moves on Microsoft.
And then my other one was Meta. If you like breakouts, Meta looks like it's going to take out, I don't think it has yet, right? The high, 542.81. It has not. But that 542.81 looks pretty precarious.
I got a lot of old dope on my chart, but yeah, it's working right to those levels. And then I think we might even get, let me borrow these. Oops, didn't want to do that. Run right to the middle of that trend. Size that. Extended moves are great, especially with Meta. When it takes momentum on, it just runs. So we could see it extend. We're already just above that 86.6 fib level of the previous high. And if we trend on up, we got a full measured move up to like 458.40. Right on the money. Nice move. I like Meta.
And the only other thing I'd be looking at is at some point, it's going to be time to go long VIX again.
Yeah, I can see that too. It tends to get volatile when we get these kind of market conditions. You get a little fear in there. People are a little timid of pushing things higher or even buying things this high, and then they start looking for, okay, well, where do I short it? That might be the thing. Pay attention to the VIX in a volatile market, of course. But when it's like flat and lifeless in a trend market, you get the little pips, but you don't get far with it. But this volatility has been great. This
Well,
is
and the cool thing about it is how much it can go up. So, that Monday, last week when the market was down like 3%, my portfolio was up. One of the reasons it was up, I had calls on the VIX index. I had puts on UVIXI. My UVIXI puts, had fixed risk. So, they went down as much as they could go down. But my calls on VIX just went through the roof.
nice.
And, that was great to see on a day when I forget what it was up like 60, 70%.
That's pretty impressive. I mean, you get those, and you get bigger blocks. So like you're into, your R to R on your options trades are a little different than mine. Mine are way out of the money. Yours probably at the money or in the money.
No, I'm doing at the money, in the money. If I'm doing out of the money, it's slightly out of the money.
Yeah,
So my VIX calls had a great day that Monday.
and it's a proponent. So like if you weigh the risk versus some of the ones that I'm running where it's just massive percentages, dollar for dollar, they're pretty close to the same performance, overall. Because if I take the same size, I'd have to put in at the money or one strike out or something like that into the positions I'm taking. I'd have less of it, but dollar for dollar, it's pretty close. So it also depends on where you're at in the delta before the delta starts to move exponentially too. I'm like way out and super low delta, and I have my own reason for that. I mean, I like to do it to think of it as, delta is a two-way street. It can work against you just as strongly as it can work for you. So when I'm trading these low delta swings, I'm looking for the swing in the delta. If I'm looking for high delta stuff, I know that if things go wrong, that delta can run against me. So you got to be really dead on for your price analysis when you're taking at the money or in the money trades. But
Yeah, and me, I mean, I'm the other way. I prefer high delta because what I hate is I'm right and I still lose money or I don't make any money.
right, and that's true too. I mean, I've had some where I've been right on the move, but so far out where the delta was so low, I didn't really do anything. So
Yeah,
it's
and I tend to trade bigger, I think, stocks than you do. I'm in more of the household names that aren't going to move, 10% in a day or a couple of days.
right, and I'm looking for the big volatility. So that's it. It's everybody's got their own style, and it's great to be able to bounce it off of everyone else's style too. I mean, you've got obviously you got a much more much more sizable working capital than I do as a retail guy. But in the same measure, we kind of think alike on technical analysis, and that's why we're here. So I mean, we have different trading styles, different methods to achieve this goal of making money in the market like everyone else. And it all works the same, but it's like you have different methods to it. And if you have enough people thinking the same way in a group, everybody thrives together, and that's kind of why we're here as well. We want to be able to pay that forward.
Yep.
So moving on, the other one we had looked at was did we talk about Nvidia? Nvidia is kind of making that exact not revenge trade, reversion trade. We went right up to the edge of that liquidity zone today. This is one we've been keeping a very close eye on because we love trading Nvidia. That's my kind of volatility. And to boot, NVDX is our other cash camel, so to speak. It's a 2x leveraged ETF run by yours truly here, Mr. Matthew Tuttle.
There you go.
And the flows are looking better and better on that thing, and I'm starting to see that options chain tighten up really nicely. So I'm kind of liking.
Let's go. I mean, I want that options chain tight.
If as long as we can.
Yeah, I mean, a whole bunch of bad news came out about Nvidia. It went down, bounced off 90, and I mean that was the time to buy.
That was glorious. I mean, perfect time to buy. And it walked and pretty much predictably found our pivots, found our liquidity zones, made our moves, and that thing was just so easy to take technical analysis to. I mean, we kill it when we trade Nvidia. And all I need is weekly options to appear on NVDX, and I'm going to be a wheel trader on that one. So I'm close. It's getting there. Looking for a little more action on some of the smaller stuff, and here I go with my list. This is some fun stuff. I got a couple pharmaceuticals in there. I don't care to trade pharmaceuticals typically, but when they move with good price action analysis, we tend to pay attention. We had one of them show up on a watch list that just popped up, and Teva. This thing's a
Teva
favorite. Everyone loves trading this.
A breakout.
Heck yeah. Breakout trade. It popped up on the breakout scanner today. I went and plotted the measured move. It's got great follow through. We're just above the halfway point with this wick here. So if we continue to consolidate and push on from about 1850 up, we've got a target a lot higher in that measured move, $20.45. $20.95 is the next pivot level on that one. I think that's on the weekly chart if I zoom way out.
Yeah, I mean, nice long base on this one.
Monthly.
This looks like a Stan Weinstein stage analysis special here.
Heck yeah. I like it. And I think if we can break out above that 20.95 and then consolidate in a range between there and about 24.75 or $25, somewhere in that range, this can go and give us the benefit of market structure, because we can see exact market structure in this thing on the monthly chart here. We get the trend, we get the hype pushing it way up, reversion trade, second high, we get a measured move down. Here's your floor, here's your consolidation period. This is where we tend to push up to this pivot. The likely move is to finish at about this pivot and then consolidate back down to a mean reversion, maybe even give us a secondary consolidation period going into next year, or even beyond. After that, we could see this thing swing for the mother of all reversions, and it could go all the way up to like 37, $38 for you investors out there eventually. But let's wait and see what happens with this key pivot here first. In fact, I'm going to mark that in red just as an area to pay attention to. So if you're trying to follow Kramer into this thing and he's saying buy, 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 beware that that's likely where people are going to take profit. So us traders will have control over that probably, unless this thing absolutely gets some killer news, some breakthrough cancer treatment or something, whatever. You never know with these pharmaceuticals. Sometimes they'll rip a face off and just go for a mean reversion out of nowhere. And, if we're paying attention to the short-term price action here, we're likely to see some sellers in this area around 20.95, $21, somewhere in that neighborhood. And then
As an aside on these types of stocks, and I don't know much about Teva. I mean, I think it's an Israeli company, but that's all I know. Digital biology, not now, not tomorrow. It's maybe 2 years or so away. But Jensen Huang said a few months back that's where he thinks the opportunity is. And the stuff I'm seeing of what AI can do for these biotech stocks, so we'll probably do an ETF around that in a couple of years. Again, I mean, we're
that
not there yet, but that's the future.
that does sound promising and close at hand. A couple of years is very little time for guys like us. Um, I I like that. I think I want to wonder what companies are going to take into that with both hands, so to speak. I bet Teva's one of them. Just saying, they're pretty cutting edge, those guys.
I mean, could very well be. I mean, there's going to be winners and losers, just like everything.
True that. And then when we get into pharmaceuticals, typically we're day traders on them over at Bullish Bears, and every once in a while we'll find one that just has a absolute 3, 4, 500% move out of nowhere. We usually catch those pretty easily, but the problem with those is the penny stock ones that are just fading and fading and fading, and you start to find stuff that's like hemorrhaging money for like decades. Stay away from those as investors, of course. But a quick trick I wanted to show you, pull up a daily chart, zoom out, and you get all the earnings and stuff like that. Who cares about the earnings? Scan that thing all the way back to its IPO. Keep looking, and Teva here, it's going to take forever to do, but I don't see a single reverse split in that thing anywhere, and that's the key. When you don't see any reverse splits, it's not a company that's designed to hemorrhage money. It's a company that's designed to make money. So they want to pay attention to taking care of shareholders. Those are investment grade pharmaceuticals as they're pretty much defined. But when you start seeing like, 1 for 10 or 1 for 100 reverse splits and just all that garbage along the base of your chart here, don't hold those longer than you have to. It's a game of hot potato. And us day traders, we will be all over those stocks. We will absolutely scalp them to death. We don't care. And it's just a company that's designed to fade and hemorrhage money like that for decades. It's even easier.
Speaking of biotechs, let me show you a trick. Pull up a chart of ADMA.
ADMA?
ADMA.
Okay.
So
Wow.
see that move. So I don't know if you're familiar with a guy named Larry Connors, but he's the guy who created the Connors RSI. He's a big options guy, and he taught me this trick, which is if you're buying a short dated option and you're profitable, instead of selling the option, take the other side on the stock. So a week or so ago, I had puts on ADMA, and I made money. And the system that I used to buy the puts triggered a hey, take profit, and the bid ask spread just stunk on the puts.
Right.
So I'm like, you know what? Screw it. I'm just gonna do what Larry taught me, and I'm gonna buy the stock. And I sold it yesterday, and you see that jump. So yeah, all right, my puts went to zero, but I made I made way more on the stock jumping up like that
Oh yeah,
than I would have made had I just sold my puts and taken a profit.
good point. That's a good method.
So I mean, it's an interesting trick of, and I don't know that it works in long dated options because of the time value. But in short dated options, if you've got a profit on something, instead of selling it, just look to take the other side on the stock because you get something like this. I mean, this is one of those way better to be lucky than good.
Right. That's a hell of a deal. I mean, I don't see a single reverse split on that thing. That's the one you look for. Apply both of those methods and you got a win-win. Nice stuff. I like that idea. I'm gonna have to do some research into that and see what I can
What
pull
you'll
off on that.
probably find, because when he taught this to me and I started looking back on some of my trades, I left a lot of money on the table. Because, think about it. If you've got an option that let's say it expires in 5 days, you take the other side on the stock, you're pretty much guaranteed your profit's already locked in.
Right.
So,
Because it'll be intrinsic at
the
that
only
point.
thing that can happen is you end up making more than you would have made, which again, I made more in multiples on ADMA than I would have made had I just gotten rid of my puts.
And then still having the put, I mean, you got a built-in stop right there.
Right. I mean, I was protected.
Right.
My gain was locked in. So nothing bad can happen to me. I was just going to be like, you know what, let's, I'm long the stock. I'll sell the stock through the put. And then I look at the stock. I'm like, holy crap. I'm up like, 80% on the stock.
Heck
My
yeah.
put's worthless, but who cares?
Absolutely. Because I mean, it was just there as insurance and it locked in profit anyways. Because
Yeah.
it moved intrinsically with price and you were long the stock. I mean, that's a killer strategy. I like that one.
Yeah.
I have kind of a similar one where like, and I apply this to be able to day trade. And I developed this in a small account because I mean, if you look at my bio, I started trading with $5, like no joke. And very frugal as I am, slowly compounding that into enough to replace my income. I've effectively developed something in that stage where I was still under the $25,000 PDT rule in that account, and I could only make 3-day trades a week in my options account because it was a margin account, and that was just how Robinhood's built. So I quickly learned that if I have something that has some timed expiration, anywhere from like 2 to 5 days typically was back in those days when SPY and QQQ only had 3 expirations a week. Instead of going and day trading the option, I would take the other side. So I would go and sell a strike to above the, let's say I was doing calls, I'd sell a strike or two above my long position against it to lock in my profit. It's a can't lose situation. Anything I've made above 100% on the option that I bought is locked in by selling the short leg. And it keeps me in a position to where I can close that the next day regardless of what price action does, whether it just rips a face off and goes against me, I still have value in the spread itself that I can also sell on the open and collect a little bit more above the profit I locked in. One. Two, if the price goes and continues to rally, I can get more because suddenly that spread would become more valuable. I've had some of them where they go in the money and I closed damn near max profit on them. It happens sometimes. And if you apply that strategy to something like this, similar, this actually outperforms it 110% or better. Just looking at your 80% gain, even though the put lost, you killed it with the stock. That's very cool. And you didn't have to day trade. Win-win.
And I didn't even, I wasn't even paying attention to it. I looked at my account yesterday and I was like, whoa, wait, what?
Nice move. That's pretty good. I love that. I'm gonna have to try that a couple times on these, especially when they're optionable, even if the spread's not good. I like it. And I think there's kind of a method of the madness on all of that, but that's another thing that we do here is we love to be able to educate people and help you guys by kind of giving you a hand up and showing you all these different strategies that you can use to kind of not necessarily beat that system. We're not trying to, hand it to the man, but we have many different ways that we can diversify our tools in our trading styles to utilize them to lock in profit or to go against adversity. Like if you're under the PDT rule, if you're in a small account, all this stuff is very helpful, and it's something that you really don't have to do a lot of research to figure out how to do. And once you get that swing, man, you can lock in profit, have some can't lose positions. Not only that, you get the capital back in your account that you can do anything you want with right away. So it's something that you can go, and once you sell that short leg, that money is in your account. Now you can go and take another trade. So pretty cool stuff.
Yep.
All right, let me get a couple more that we were watching. SE here, I don't even know what these guys do, but it was on our scanner this morning, and it popped up beautifully. Breakout trade, obviously.
This is a stock that moves. I mean, I'm not in it now. I haven't been in a while, but this is one I've traded in the past, and when it goes, it goes.
It's a good one, and it's got that market structure look. We're in the accumulation period. I think resistance is right up here at about $89 or so, and that's on the monthly. We pushed out a beautiful measured move this morning. We're right at the halfway point and breaking above it. Finishing, we could see this thing push as high as like 84.30 either today or tomorrow. And from there, we'll probably want to see some accumulation and maybe a reversion trade, and a slow melt eventually to that $89 target would be awesome. But yeah, this thing's been a killer
cup
trade.
and handle-ish on the monthly.
Yeah, I mean, it's got that look. I mean, we could see
on the weekly also.
We could see that round out and then give a, let me shrink it down now. Got to fit it all on the screen. We could see it climb the wall here and run for, full reversion up here. That's possible if it breaks out above this pivot. We could see it hit the 1, 2, 3 over here and then go beyond and hit the 210. That is possible. We could see this cup and handle out. That's a good point. And this is the kind of stock that could do it. I mean, this has some killer moves. We've seen some pretty nasty sell-offs, but it's got lots of volatility. It's my kind of stock. So I'm going to definitely keep this in my shuffle for a while. I like it. It's a good trading stock.
Oh, yeah, it's a great trading stock.
I'm going to have to be all over that. Another one to mention, we had a little bit of movement on CRM, and I have some old dope on that, but we did pretty much nail an angular resistance that we come up with on this wedge here. Same, descending, broadening pattern, following SPY and Q, of course.
If it can break the 200-day, you're probably looking at a gap fill.
Yes, sir. And we're liking the 277 target upon that break. So if we see this thing break, about 264.50 by the time price gets there to the 200, we could see a nice move finish out and then hit the halfway back on this whole trend here. And then we're still inside of the big move, which we plotted out on a weekly chart. That's a beautiful measured move setup. And think of this also like a cup and handle. Here's your big cup. It's a little choppy down here, but this is where the handle would be, and that's a perfect descending wedge like that. That is the handle. So if this thing starts to break above this pivot here, it'll smoke that high pretty easy. So that's a not textbook cup and handle, but pretty damn close. We like those. Lastly, we liked NVO last week and the week before, and here it is. We got follow through, guys. It worked out beautifully. We went right through the LZ here, came right out of that descending wedge, just like everything else.
Wow.
And now we're up
about the 50-day.
And we're up right into a 4-hour gap right here. We noticed, and the daily chart shows it too. And we're well within reach of closing that gap pretty quickly. So watch this thing get volatile. It could run right on up to 140. This thing is just
take
cooking.
a look at Lilly also. We're coming up on all-time highs.
Yeah. So it's NVO is going to go right on the heels of this thing, and it's already closed this daily gap just about. It's right at it right now where you're starting to see some profit taking. So good stuff. I think we will try not to injure our arms, patting ourselves on the back for calling that out last week and the week before. We did good. And then To revisit a few of those, we had quite a bit on it. We had Shake Shack over here. It's right back in that next measured move target range. We see the break right above the key pivot areas.
Wow. Yeah.
That did very well. That earnings call was pretty awesome. We saw that ripping rally, gave back half, and then consolidated and just ran to the moon. We're into the all-time high territory here. We're just under it. So watch this thing for a continuation move to run on up to 122.18 here, half of a measured move, which is a 2-for-1, by the way. There's your blocks, 1, 2, sorry, 1 and 2. 2-for-1 would take it way up here. That's way out of range, but not all-time high. That's previous high. All-time high is back here, and our measured move full block would be right in that neighborhood. Man, nutty. This thing is just ripping, and it's one of those stocks I love to trade. It's a little bit haphazard because it is a bit gappy and kind of clunky to look at the price action, but get into the shorter terms and it's just beautiful. I mean, the follow through on this thing just does very nice. It's a very clean moving chart in the shorter time frames in a day. So go look at your 2 hours, look at your 15 minutes and 30 minutes. This is a trader stock and it's beautiful. We already mentioned NVIDIA. LRCX was one of them, and this is another one that followed through. We're looking for reversion. We got another pivot in here we're just about to hit too, by the way, which is right in about $900. So definitely keep an eye on this thing. That follow through's been beautiful. Again, we will try not to injure our arms, patting ourselves on the back. We talked about this. FCX was your baby on that one. That one's doing well, right back above that pivot, and we're looking for a push into this LZ here, so we could see this thing run above the.
Yeah, I mean, 200-day is 2 cents away.
It's right in that number, and that liquidity zone is right off of the half of this trend move here. So we get halfbacks pretty frequently. It's kind of a reversion traders paradise these days in the market, and this is just a prime example of that. That one's doing awesome. Another one we were talking about, EXAS. This one gave us some volatility here, but we knew it was likely to back off of this liquidity zone, and we definitely picked that one off pretty good. The trend on it was good. This consolidation range was okay. It's a bit choppy. It's more of a day trading stock, but more or less it followed through to that reversion target beautifully and kind of backed off. If it can break its 200-day and we're right up against it here and get out of this liquidity zone, we could see it extend up here to about 62, 63 bucks pretty easily. So keep an eye on this one as well for more follow through. And again, we called it out right here. Our accuracy rating's high. Go look at our history. We do great. Chipotle had some volatility the other day. We got a little sell-off on that one. Didn't get the best follow-through on it, but we were pretty certain it was going to start struggling once we started to see it hit these ranges again, and we weren't wrong. Now we're looking for...
I believe their CEO left to go to Starbucks.
Yeah.
Which created some volatility. That's probably that bar on, what would that be? It's today Thursday, that'd be Tuesday.
Yeah. I mean, that's, it sold off, but there were buyers right down here to soak it right back up. And I missed my long entry on it down here. I already had taken out profit on my swing. And I noticed this was starting to look like a bear flag yesterday. So I'm like, I could get in here, but I don't know if it's going to quite make that reversion of that whole bar from the sell-off. And then sure enough, we're right back in the middle of it. So I missed the boat on that one, but I think if we consolidate here in the LZ and continue to press on above the 200-day, we could see it follow through for a full reversion here and get back into this level here around 58, 59 bucks or so. Just kind of take range off that doji right there. It's pretty obvious.
Yeah, so 200-day is 53.70. It's right there.
Yeah, so we're steps away from that one. So definitely keep this one on your radar. We knew it was going to struggle with the LZ and start to play, and then we've got a surprise. Hey, the CEO's jumping ship and running to Starbucks of all places. Mm-hmm. Although I'm starting to like Starbucks a little more. I'll look at that chart if you want, but I don't know, man. I think Let me get Starbucks up here. There we go.
Sorry about that.
No worries. That throws me for a loop, but I like a challenge. Let me look at the monthly on Starbucks. This is what I'm noticing.
I don't know that I trust this. I
Me
mean,
neither.
just because they got a new CEO.
I got a lot of old dope to delete on this thing, but I've scalped the crap out of Starbucks on the options chain. But when I look at the big picture, I realize what I'm seeing. This is consolidation, and it's either going to be the mother of all bull flags and take Starbucks to the moon, or it's going to get sold off and go for reversion. I don't know, man. Once things start to unionize, we kind of know what happens to the margins. It just, look at GM and Ford and all the other automakers. But these guys don't make anything. They sell service and they sell inventory. It's retail. So who knows? We could see it just completely pull an Amazon and say, "The hell with you guys," and run anyway. Amazon's not unionized, but kinda. With some of the subsidies that operate their shipping. I don't know. Kind of tough to say. I don't want to bag on unions, but we know that does take a hit on the margin for most companies, and I'm going to draw a line right here. If we breach it, cool. We could see Starbucks take off a little higher, but yeah, I think they like the new CEO.
Obviously, they do. I'd fade that move versus trying to buy it. I mean, they were having all sorts of issues before that.
I like the idea, and I also like the idea of a reversion trade. So this might be a good put trade coming up here. I might take a couple, out of the money spreads into there, and I would say
I'm surprised I didn't get a put trade on this in one of my short models.
I thought about it.
It probably set up and never triggered.
I was deployed in a bunch of other stuff, so like I didn't really take a move on that CEO change, but maybe it would be a good fader. We might see this run back
You
down.
know what? I think I saw the setup the other day, and just the trade never triggered.
Yeah, that might be it. But I mean, that's one hell of a bar. I mean, we'd love to see those give half back, and we're right up against resistance. So keep an eye on this. If we start to see some fade start to take shape here, or a failed flag, or whatever we end up at the top here, we could shoot for 87.5 and maybe even go a little lower to like 85. That's possible. These rip roaring rallies on news tend to fade pretty quick. So we'll watch this flag on the 2-hour and see which way it breaks. Keep your eyes on it. Last but not least, one we were talking about last week was Alcoa, man. It's melted through liquidity and we're starting to trend. And it's doing pretty nice.
200-day right there as well. Looks a lot like FCX.
I like it. I'm going to delete my segment line and put a pivot there. It's about halfway between two LZs. It's right on the money in there. Break this, go higher. I like it. 200 days right up the street. So pay attention to this thing. It could just, at this end, FCX and what's the other one? US Steel X. I haven't looked at that in a while.
Yeah. I'm not a big fan typically of that.
No, it's too volatile. It's very sketchy trades, but this one's smooth. I like Alcoa. Melt this zone, reversion trades right on the map. About 36.70 would be a good outcome target for this move. Can be a V bottom reversal. Pay attention to this liquidity zone though, because if it rejects here, it can certainly go back into a fade and hit a double bottom type of chart on the daily. So definitely be aware that it can reject here or here, but if it melts this, there it's going. So mark my words on that. We'll see how accurate I am. Right on. Anybody got any tickers to throw at us on the live stream here? We're out on YouTube. Hello. If you want us to look at something, we're happy to. And if not, comment anyways. And of course, tell your friends. We want to be out there in front of a bigger audience because we're doing very, very well with our call outs, man. I mean, our accuracy is pretty damn good. Compare us to anybody, I dare you. Especially Kramer.
Especially Kramer.
We've kind of transitioned to doing a watch list type format show instead of dissing on Kramer all the time because I think there's fewer and fewer people who give a damn about what Kramer says anyways these days. Not to throw shade at him by saying that, but I think his audience is dwindling a bit. The ones that are straggling are just in it for the thrill of calling in live to a TV show. So,
Or they died in their bed in front of Mad Money and no one has discovered their bodies yet.
that could be it. That might be a bunch of their ratings metric right there.
Could very well be.
Oh man, we're evil. But always feel free to reach out to us. If you shoot us a comment, and even if it's after the broadcast, feel free. If you want us to talk about something, throw us a ticker, throw us something. We love talking to people, and we love helping people above all. And that's all our hearts are after, is to pay it forward and show people how to, well, eventually find a way to replace their income on their day job and be able to relax a little bit and do some fun stuff like this. So maybe we'll have a whole bunch of people competing. That's what we want. Thanks again for joining us, guys. Have a wonderful week. And I always say this to my live stream folks in the membership. I like to say, go eat your lunch before the market eats it for you. So if you're a day trader and you take your profits by 11, dude, call it a day. Keep that. Wait for later in the day to maybe get some swing trades on if you do both day trading and swing trading. I like to do both because I love to make accuracy out of my day trading. In my swing trading, I can pick exact points to enter and exit trades very well. So combine the two. You do well in the afternoon when you're going into those option spreads because you're going to see the volatility come down and condense, and then once you get that sweet spot, you can make some killer trades. So that's where I like to be. So I'll go eat my lunch, and later on I'll come back and probably make some swing trade entries because the market's looking great. Thanks again for joining us. We'll see you next week.